So before we talk about how to protect our capital and what our playbook should be this week as we move towards the June 24th date, I want to lay out 3 potential scenarios that could happen Thursday morning when that opening bell rings. So I had made this picture made to lay out my 3 scenarios, and I want to start with scenario number 1 on the top. And this one is the dream outcome for Micron. So in this case, this is where Micron beats estimates, it raises its guidance, it confirms stronger than expected pricing power, and it expands long-term contract visibility into 2027. In this scenario, the stock likely gaps up higher immediately because Wall Street's elevated, or let's say that now it's like super elevated expectations, still prove to be too conservative. I think this is possible, probably not very likely though. I'm leaning more towards scenario number 2 in the down in the left-hand corner here. This is a scenario where this wouldn't surprise me at all if we see this happen. Micron delivers an incredible quarter. It beats expectations. It confirms the structural thesis, but management simply meets the market's now extremely elevated forward expectations. In this case, I think we could easily see a temporary 3 to 8% sell the news pullback immediately on Thursday morning. That isn't a broken thesis, though. That's institutions harvesting profits, market makers crushing implied volatility, and traders resetting positions after an extraordinary run. And then far to the far right, we have a third scenario, which is the risk case. I think this also has a very low probability of happening, but we'll go through it anyway. So in this case, this is where Micron posts strong numbers, but hints at some type of small crack in their approach. So this could be a packaging constraint. This could be an HBM transition risk, softer than expected pricing assumptions for late 2026. Maybe their long-term contracts aren't as clear into 2027. Something where there's a crack in the armor for the stock overall. And because expectations have been inflated to near perfection, algorithmic traders would likely seize on any perceived crack in the narrative to drive a much sharper correction or downturn for this stock. So this brings us to the most critical and candid conversation that we need to have on this channel, because many of the members in this community have entered their Micron positions early in this cycle. And because the stock has experienced an astronomical rally, many of you have watched your balances just absolutely skyrocket over the last year. And now you're facing a critical turning point, or maybe you have a critical decision to make. And that decision could be choosing between chasing a bit more of the near-term upside with Micron, or taking definitive steps to protect your wealth or the gains that you've made in the stock. So I think we just have to shift. My recommendation would be shift your mindset into being more of an institutional risk manager versus a retail gambler. First, I want to give you my approach. I want to be very transparent on what I'm going to be doing this week with Micron. My plan is to hold. I'm going to hold through the print, and I'll hold through any post-cooling that we see after the print on Thursday, even into the week, maybe even into next week as well, because my personal capital timeline is long. My cost basis is incredibly secure with Micron, and my target model shows that this structural AI gigacycle is going to drive Micron back to 1,500 and beyond over the multi-month horizon. So I am mentally and financially prepared to sit through a temporary algorithmic flush, just like we saw back in March, where the stock dropped down by 30% 8 trading days after its print. But remember, after it hit that nadir and was down on March 30th, it rose 252% to where we stand today at just over $1,100 a share. But my risk tolerance may not be your risk tolerance, and that's why I've updated the playbook. If you've entered this trade late, or if you're using leverage, or if your Micron position has grown to such an outsized, uncomfortable portion of your net wealth that a 12 or 15% downward swing post-earnings would force you to panic and sell at the absolute bottom, then you should consider a tactical de-risking strategy before the market closes on Wednesday. And if you want concrete proof on how the smartest money in the world, or smartest money in the market, handles this kind of expansion, we don't need to look any further than Micron's own executive suite. So let me pull up that. We can take a look at the moves that their executives have been making over the last 90 days. And you can see on your screen here, if you look at April and May on the far right-hand side of the graph, you will see that Micron's own insiders have sold roughly 93 million shares in the open market in the last 90 days. The people running Micron, they're not panicking. They know the structural super cycle is real. They know how strong the fundamentals are with this company, but they are participating in disciplined asset management. They are taking massive chips off the table at these all-time highs right now to lock in generational wealth for themselves and their families. So this may be an approach that you want to consider with your stocks, with your portfolio as well. Is this an opportunity for you to take, generational wealth for your family off the table and lock it in before we see any volatility in the market overall? If you're in that position and you want a recommendation, my recommendation for you would be to execute what we will call the house money protocol. This would be dynamically trimming a portion of your position. Say specifically extract your initial seed capital plus a small cash buffer. Take your family's principal completely off the table and park it securely in cash. Let the remaining house money position ride through the print completely risk-free. If the stock flushes on a short-term algorithmic sell the news event, your family's core wealth is secure. If the stock gaps up because we just hit, it was the dream outcome, you still maintain a massive unhedged upside exposure in the stock. If Micron faces a short-term correction next Thursday morning, we have to believe that we will see a synchronized sympathetic algorithmic pullback across the entire memory sector. And when retail traders see a 5 or 6% pullback in some of their favorite stocks like Western Digital, Seagate, SanDisk, they very well may panic and hit the sell button and dump their holdings. And that would present us with an excellent opportunity to enter these stocks at a lower price point. If you're looking for an entry point, the market may give you a gift-wrapped opportunity overall. So let the automated algorithms play their short-term games on Thursday morning. If the knee-jerk reaction to Micron's print causes a sympathetic drop across the storage names or across the broader memory sector, this isn't a sign of structural weakness, as we've said. It is a highly lucrative, gift-wrapped opportunity for each and every one of us, an opportunity to find a new entry point if you're looking at it for one of these stocks. So stay disciplined. Protect your principal this week. If that playbook makes sense for you, I encourage you to execute it overall. But most importantly, ignore the noise that is going to hit us in the beginning of this week.